Welcome to today's episode of Mind Over Money by GinFi. My name is Peter Botha, and today we're diving into a topic that's on everyone's mind.
All right, so you're ready to start investing, and you've got $1,000 to make it happen. We're going to do a deep dive today into the best strategies to invest that very first $1,000, and we're going to see what the experts have to say.
Oh, wow. That's interesting.
So first things first.
Yeah.
Where should you put your initial $1,000?
So what's great about ETFs is they give you instant diversification across a huge range of companies.
Okay.
You're essentially buying a tiny piece of companies like Apple, Microsoft, Amazon, all in one go.
So it's like a shortcut to owning a piece of those big players without having to buy individual stocks.
Right. Oh, really?
He also recommends a high dividend ETF. What's the deal with those? Do you just get extra cash for holding them?
Pretty much, yeah. Those dividends are like little bonus payments you receive just for owning the ETF. Think of it as passive income that can really add up over time. And to round things out, Steve suggests putting a portion of your $1,000 in a money market account.
Now, money market accounts sound more like saving than investing.
Mm-hmm.
Why would you include that in an investment strategy?
Good point. Money market accounts offer stability, and right now they've got some pretty attractive interest rates.
Oh, okay.
It's a safe haven for your money, while the rest of your investments have the chance to grow.
So it's like having a little bit of your money tucked away safely,
right,
while the rest of it is out there trying to make more money.
Exactly.
Got it. So Steve's approach is all about balance, growth potential with the ETFs, passive income with the dividend ETF, and a secure foundation with the money market account.
It highlights a key principle in investing no matter how much money you're starting with. Diversification is crucial.
Okay, but we can't talk about investing in 2025 without mentioning crypto.
True. The
Altcoin Daily guys are super bullish on Bitcoin, even comparing it to buying digital real estate in New York City 250 years ago.
Wow.
That's a crazy analogy.
It's a bold analogy for sure. The idea is that Bitcoin, like valuable real estate, has limited supply. Only a certain amount will ever exist.
I see.
And that scarcity, in theory, drives its value up.
Makes sense. They also mentioned that 19 U.S. states are racing to buy Bitcoin.
Oh, wow.
Even talking about it as a potential strategic reserve. That sounds like a huge deal.
Yeah.
What would that mean for its value?
Well, if governments start holding Bitcoin as a reserve asset, it would definitely signal a major shift in its perceived legitimacy.
Okay.
It could potentially boost demand and drive the price even higher.
So it's like a stamp of approval from the powers that be.
Yeah.
Interesting. But going back to our $1,000, Altcoin Daily doesn't stop at Bitcoin. They suggest using the remaining $500 for a mix of Ethereum, Solana, and other altcoins tied to things like AI, real-world assets, and gaming.
Ethereum and Solana are really interesting because of their real-world applications.
Okay.
Ethereum is the platform behind a lot of stablecoins, and Solana is gaining traction too. Even PayPal chose it for their recent stablecoin launch.
Speaking of stablecoins, those seem less volatile than other cryptocurrencies. Are they like a safer way to get into the crypto game?
You could say that. Stablecoins are designed to maintain a stable value, usually pegged to a traditional currency like the US dollar.
Yeah.
They're becoming popular for everyday transactions and as a way to hedge against the wild swings in the crypto market.
Okay, so like when everything else is going crazy, stablecoins are just kind of chilling out.
They're just trying to stay stable.
Got it.
Yeah.
All right, but what about real-world assets in the crypto world? That one's throwing me for a loop.
Think of it this way. Projects like Ono and Propi are trying to bring things like real estate and fine art onto the blockchain. So you could potentially buy a fraction of a house or a piece of a famous painting using cryptocurrency.
Wow, so it's like bridging the gap between physical assets and the digital world of crypto.
Exactly.
That's a pretty wild concept. All right, we've gotten some interesting perspectives from the YouTubers, but now I'm really curious about this millionaire's 4-year investment experiment. Tell me about Mark Tilbury and his approach.
Mark invested $100 into 5 different asset classes and meticulously documented his results. It's a great real-world example of how different investments can perform.
And he started with individual stocks, right?
Yeah.
He picked 20 stocks randomly, and one of them was Samsung. Did that one pan out for him?
Not really. He actually ended up with a negative return on Samsung, which just goes to show the inherent risks of individual stock picking.
So high risk, high reward, but it's also easy to pick a loser?
Definitely.
Like if he had landed on something like Apple or Microsoft, though,
Yeah.
he'd be singing a different tune,
Yeah.
right?
Absolutely. But his experiment highlights the importance of research and strategy when picking individual stocks. It's not just a game of chance.
Okay, next up, Tilbury invested in REITs,
Yeah.
those real estate investment trusts. How did those perform? I remember Steve from Call to Leap recommended those too.
Tilbury's REIT investment actually resulted in a small loss.
Oh.
But he still received consistent dividend payments,
Wow.
showing how REITs can generate passive income even when the market isn't doing great.
Interesting.
Yeah.
So REITs seem like a good option for someone who wants steady income without taking on too much risk.
Yeah.
All right, let's talk crypto. Did Tilbury strike gold with his Bitcoin investment?
He did. His Bitcoin investment saw significant gains. But what's interesting is that he also lost money on some less established altcoins, even falling victim to scams.
So it's a good reminder that crypto can be volatile, and it's important to do your research,
Definitely.
especially when it comes to those lesser-known altcoins.
For sure.
Okay, what about gold? Did it live up to its reputation as a safe haven?
It did. Tilbury's gold investment held its value steadily over the 4 years.
Yeah.
It didn't experience explosive growth,
Mm-hmm.
but provided protection during market fluctuations.
So gold is more about preserving capital than generating huge returns.
Yeah.
All right, last but not least, how did Tilbury's index fund investment perform? Remember, that was Steve's go-to recommendation for diversification.
His index funds, which tracked the S&P 500, delivered strong returns.
Why?
This really reinforces the idea that index funds can be a reliable way to achieve long-term growth, especially for new investors.
It's fascinating how Tilbury's experiment with this diverse portfolio aligns with the strategies suggested by both Call to Leap and Altcoin Daily, even though they come from very different perspectives. It seems like diversification is the common thread here.
Absolutely. It's a fundamental principle of investing that holds true whether you're starting with $1,000 or $1 million.
And what I appreciate about Tilbury's approach is that it's so relatable. He doesn't just throw out abstract numbers. He shows you the process, the wins and the losses,
Yeah.
making it easier to understand for someone just starting out with $1,000.
Yeah, it humanizes the investing experience and reminds us that it's not just about spreadsheets and algorithms. It's about real people making real decisions with their money.
Speaking of relatable, let's circle back to GinFi. They seem to be all about making investing accessible for everyone, especially those starting with a smaller amount, like $1,000.
From what I've seen, GinFi offers a wide range of investment products, and they have some really interesting features. They're a regulated broker, which provides an added layer of security and transparency for investors.
That's definitely important, especially when you're new to the game.
Yeah.
But what really sets GinFi apart, in your opinion?
I'd say they're focused on education and support.
Okay.
They have a ton of resources for beginners, and their customer support team is supposedly excellent. It's like having a personal guide to walk you through the process.
That's great for someone who's just starting out
Yeah.
and might feel overwhelmed by all the options. But GinFi also has tools for more experienced investors too, right?
Absolutely. They offer the MetaTrader 4 platform, which allows you to execute both manual and automated trading strategies. Plus, they have competitive fees and spreads, which can make a big difference in your overall returns.
So it seems like GinFi offers something for everyone, from beginners dipping their toes into the market to seasoned investors looking for a comprehensive platform. I'm really starting to see how they could be a great option for someone with $1,000 ready to invest.
Especially if they're looking for a platform that prioritizes education, support, and a user-friendly experience.
Okay, so we've covered a lot of ground here. Diversified approaches, crypto craziness, and even a millionaire's real-world experiment. What do you think is the most important takeaway for someone who's listening right now and thinking, okay, I'm ready to invest my $1,000, but where do I even begin?
I'd say the biggest takeaway is that investing is a journey, not a destination.
Oh, I love that. It's not about getting rich quick.
Yeah.
It's about building a solid foundation for your financial future.
Exactly. It's about taking those first steps, learning as you go, and developing a strategy that aligns with your individual goals and risk tolerance.
And remember, there are resources available like GinFi that can guide you along the way and make the process less daunting. But ultimately, it's up to you to take action and start building that brighter financial future.
So true. And it all starts with that first $1,000. It's like they're all playing different instruments, but the music they're creating has a similar theme.
Right.
We've got Steve with his ETF approach, Altcoin Daily diving into the crypto world, and Mark Tilbury showing us his investment journey with real-world results.
Yeah.
And then there's GinFi, which steps in to provide the platform and tools to actually put these strategies into action, especially for those starting with $1,000.
Yeah, it's like they knew exactly what we needed to hear.
Right.
But let's rewind a bit. You mentioned this holistic view of financial well-being. What does that actually mean when it comes to investing?
It means understanding that investing isn't just about picking stocks or chasing the latest crypto craze.
Oh, okay.
It's about aligning your financial decisions with your overall life goals.
So it's bigger than just watching numbers on a screen.
Absolutely. It's about asking yourself, what do I want my life to look like in 5 years, 10 years, 30 years? And then figuring out how your investments can help you get there.
So it's like creating a financial roadmap for your future.
Mm-hmm.
Like those GPS apps that tell you the best route to get to your destination.
Exactly. And that roadmap might include things like buying a house, starting a family, traveling the world, or pursuing a passion project.
Okay.
Your investments should be working towards those goals, not just sitting there doing their own thing.
So it's about being intentional with our money and making sure it reflects what's truly important to us.
Right.
But let's get practical for a second. Say I'm sitting here with my $1,000 ready to start investing. How do I create this financial roadmap? Where do I even begin?
The great first step is to take a good look at your current financial situation.
Okay.
What are your income and expenses? Do you have any savings or investments already? Are you carrying any high-interest debt?
So it's like taking a financial inventory,
Mm-hmm.
seeing what assets you have and what debts you need to tackle.
Precisely. Once you have a clear picture of where you stand, you can start setting specific financial goals.
Good.
Do you want to save for a down payment on a house? Build up your emergency fund? Start investing for retirement?
Those are some big goals. But
Mm.
how do I know which ones to prioritize? They all seem important.
That's where your personal values and priorities come in.
Okay.
There's no right or wrong answer, but you should choose goals that genuinely matter to you
Got it.
and that you'll be motivated to work towards.
So it's not about following some generic checklist,
Right.
but figuring out what truly resonates with my own aspirations.
Exactly. Once you've identified those goals,
Yeah.
break them down into smaller, more manageable steps.
Oh, okay. So instead of saying, I want to buy a house, I might say, I want to save $10,000 for a down payment in the next 2 years.
Exactly. That makes the goal less daunting and gives you a clear target to aim for.
Mm-hmm.
And this is where investing comes in.
Okay.
Once you have your savings goals established, you can explore investment options that can help you reach those goals faster.
So it's like adding rocket fuel to your savings plan.
Exactly.
But with so many different investment options out there, how do I know which ones are right for me?
That's where understanding your risk tolerance, time horizon, and financial goals is key.
Okay.
For example, if you're saving for a down payment on a house in 5 years, you might not want to put all your money into something highly volatile like cryptocurrency.
That makes sense. You wouldn't want to risk losing a big chunk of your savings right before you need them for that down payment.
Exactly. In that scenario, you might consider a high-yield savings account or a low-risk index fund, something more stable and less likely to experience drastic fluctuations.
So it's all about finding the right balance between risk and potential return, depending on my goals
Mm-hmm.
and how comfortable I am with the possibility of losing money.
Precisely. And this is where resources like those offered by GinFi can be really helpful.
Yeah.
They provide a platform where you can explore different investment options, research their historical performance, and get a better sense of their risk levels.
So GinFi is like a financial laboratory where you can experiment and learn without risking your actual savings. It
Yeah.
sounds like they really do make investing more approachable, especially for beginners.
And once you've explored different options and gained some confidence, you can start building a diversified portfolio that aligns with your financial roadmap.
Diversification.
Mm-hmm.
Keep hearing that word.
Yeah,
It seems like it's the golden rule of investing no matter how much money you have.
it's absolutely essential. Think of it like a safety net for your investments.
Okay.
By spreading your money across different asset classes like stocks, bonds, real estate, and even crypto, you're reducing your exposure to risk.
So if one investment takes a nosedive, the others can help cushion the blow
Yeah,
and prevent me from losing everything.
exactly. It's about not putting all your eggs in one basket. And diversification doesn't have to be complicated.
Right.
You can start with a simple mix of assets and then gradually adjust as you learn more and your financial goals evolve.
And resources like GinFi can help with that diversification process, right?
Mm.
They offer a wide range of investment products so you can build a portfolio that aligns with your risk tolerance and long-term goals.
Absolutely. They have investment experts who can guide you through the process, help you understand different asset classes, and build a portfolio that meets your specific needs.
So it's like having a financial coach in your corner,
Yeah,
helping you make smart decisions and avoid costly mistakes.
exactly. But even with a diversified portfolio and expert guidance, investing can be an emotional roller coaster.
Oh, yeah, for sure.
It's important to acknowledge those emotions and not let them derail your investment strategy.
So how do we stay grounded and rational when the market is going crazy and everyone's panicking about the latest news?
The key is to have a long-term perspective and remember why you're investing in the first place. Those goals we talked about earlier,
Yeah.
those are your anchor in the storm.
So it's like keeping your eyes on the prize even when the path gets a little bumpy.
Mm-hmm.
But that's easier said than done,
Yeah.
right? Especially when you see your investments losing value.
It definitely takes discipline and a bit of mental fortitude.
Yeah.
But remember, investing is a marathon, not a sprint. There will be ups and downs along the way.
Right.
But if you stay focused on your goals and stick to your plan,
Yeah.
you'll be well on your way to achieving financial success.
And that's why having resources like GinFi and their expert guidance can be so valuable.
Mhm.
They can help you navigate those emotional ups and downs and stay on track with your long-term goals.
Absolutely. They can provide perspective, reassurance, and data-driven insights to help you make informed decisions, even when the market is throwing curveballs.
Okay, so we've talked about setting financial goals, creating a roadmap, diversifying investments, and even managing the emotional side of investing.
Right.
It feels like we're building a solid foundation for anyone who wants to start their investing journey with $1,000.
And the best part is that this journey is accessible to everyone.
Yeah.
You don't need to be a financial expert or have a huge amount of money to get started.
That's so empowering.
It is,
It means anyone can take control of their financial future and start building wealth one step at a time.
Yeah.
But even with all this knowledge and these incredible resources, it's still up to each individual to take that first step and commit to the journey.
That's the key takeaway. Knowledge is power, but action is what truly transforms your financial future.
So for those of you listening who are ready to take that step,
Mm-hmm.
where do we go from here? What's the next chapter in this investment adventure?
Well, we've laid out the roadmap, we've explored the tools and resources available, and we've even addressed the emotional challenges you might encounter. Now it's time to reflect on everything we've discussed and ask yourself.
Yeah, it feels like we've been given this incredible toolkit
Yeah.
for building our financial future, and now it's time to put it all together.
Right.
But before we wrap up, I'd love to hear what resonated with you the most from all this information.
Oh.
What's the one big takeaway
Yeah.
that's going to stick with us even after this deep dive?
For me, it's the realization that investing isn't this exclusive club for the wealthy or the financial experts.
Right.
It's a tool that's available to everyone, and starting with just $1,000 can make a significant impact over time.
It reminds me of that saying, the best time to plant a tree was 20 years ago. The second best time is today.
Oh, yeah.
It's never too late to start investing and take control of your financial future.
Exactly. And what's really exciting is that we've been presented with so many different approaches, whether it's Steve's balanced ETF strategy, Altcoin Daily's enthusiasm for crypto, Mark Tilbury's real-world experiments, or GinFi's focus on accessibility and education. There's a path for everyone.
It's like being given a map with multiple routes to the same destination. You get to choose the path that aligns with your goals, your risk tolerance, and your individual preferences.
And as you explore those different paths, you'll start to develop your own unique investing style. You'll learn what works best for you, what you're comfortable with, and what strategies resonate with your overall financial philosophy.
It's almost like discovering a hidden talent.
Yeah.
You start to realize that you have a knack for understanding how money works and how to make it work for you.
And that's an incredibly empowering feeling.
Yeah.
Once you have that knowledge and confidence, the possibilities are limitless.
You know, this deep dive has completely changed my perspective on investing. I used to think it was intimidating and complex. But now I see it as this exciting opportunity for growth and financial freedom.
That's fantastic to hear. And I think that's the message we want to leave our listeners with today.
Yeah.
Investing doesn't have to be scary or overwhelming. With the right resources, a little effort, and a healthy dose of curiosity, anyone can embark on this journey and achieve their financial goals.
So as we wrap up this episode, I want to leave you with one final thought, something to ponder as you continue your exploration of the world of investing.
Okay.
We've heard from experts, we've analyzed data, we've explored different strategies, but ultimately, this is your unique journey.
It is.
What's the one question about investing $1,000 that you want to answer next?
Oh, that's a good question.
What's the next step on your financial adventure?
Keep that question in mind as you move forward. And remember, even the longest journey begins with a single step.
Until next time, happy investing.
Thank you for tuning in to Mind Over Money by GinFi. If you enjoyed this episode, don't forget to subscribe, share it with a friend, and leave us a review. Until next time, I'm Peter Botha, and wishing you success in this ever-evolving world.